Hey, everybody, welcome to the Tom Rowland Podcast, brought to you by Starbright. We're brought to you by Starbright today. As always, Starbright is the maker of an awesome line of products to take care of your boat. That's where I use it most, whether it's the Salt Off product or any of the boat cleaning products. Starbright has you covered. Definitely check them out. They're not only a great company for the products that they have, but they also do a tremendous amount in conservation, and that is certainly important to us all.
I'm Jake Holehouse with HH Insurance, and this is the Tom Rowland Podcast.
All right, Jake, what's up, man? How are you?
Doing great. How are you?
Well, I'm good. I would imagine that being in the insurance business right now would be busy, challenging. I don't know. How would you phrase it? What has it been like to be in the insurance business this fall?
Yeah, it's been an interesting hurricane season, right? We started out so small, and we all thought that the national prediction was going to be totally incorrect in terms of hurricanes, and really, once we got to really September, the season heated up, and so we had really two hurricanes within 13 days hit the west coast of Florida, and really with Helene hit a lot of states within the southeast United States.
Two totally different types of hurricanes between Hurricane Milton and Helene, just wreaking havoc among many Floridians as well as people in Georgia, North Carolina, and even beyond that. Potentially, I could say North Carolina got it even worse than what we saw in the state of Florida.
I think they got it maybe way worse, because it's almost like, I don't want to make light of it at all because it's worse. It's bad everywhere, but it's almost like Florida's a little bit more set up for it. Historically, you've seen things like this before, and in North Carolina, that was just seemed to me to be unprecedented. You have rivers rising 120 feet and whole hillsides getting washed out. I've never seen anything like it. That was a really bad deal.
Yeah, I totally agree with you. I think one thing we've learned in both storms is that, Florida, with their insight towards building codes, it's actually really worked. And so, in Florida, anything built since 2002 has at least met that statewide building code. In Dade and Broward County, anything built since the 1950s has met their county building code. And so we just see a lot more resiliency within Florida compared to the expectations of what I think people thought that could happen in areas like Georgia and North Carolina. What
about the building code? You mentioned 1950. Was that a raised building code that everything had to be, all new construction had to be raised?
Yeah, so great question. So so you really have the Florida building code and county building code. So prior to 2002, each county had their own building code in Florida. In 2002, the state basically came together and made a building code. So Dade and Broward were really the innovators of their county building codes. And then areas like Collier, Pinellas, and those various counties kind of started in the 70s, and then they all came together in 2002. Now, from a raising your home standpoint, that is done by FEMA, which is the federal government that writes probably about 90% of flood insurance. And that started around January 1st, 1975, depending on the county. So there's a couple that lagged behind that, but for the most part, any home built after 1975 does meet the flood elevation code. And it's kind of crazy to think about, right? It's like 50 years ago. And so you have 50 years of construction in Florida that at least meets some type of elevation.
After Irma, the Florida Keys were hit pretty hard with Irma, and I went down there to help some friends and to the area that it was impacted, which was Hawks Cay and Duck Key was hit really hard. And so it was very obvious. You would go through a newer house and a newer house, and then there'd be an older house, and then there'd be a newer house, and all the roofs were fine except for the older house, and the roof would be torn off.
Yeah.
But the other houses were fine, and the newer construction was holding up. Now, I don't think anything can stop floodwater from coming into the house, but there definitely, it was very, very obvious when you see, the aftermath of a storm soon after that, the newer construction is definitely works. I mean, to that extent, and I'm sure that's a part of the insurance coverage, right? Like if you're trying to insure an older house these days, is that more difficult, or if you have a newer house, is that easier?
Yeah, it's really interesting. The older homes, if they have newer roofs, they still perform really well. And I think what we saw really when you think about like the 0405 hurricane season, that, really, I'd say worst hurricane season in a back-to-back format that an area has ever seen. Many of the homes that were damaged did not have the new roofs because that roofing code as a statewide basis went into effect in 2002. And then you really had that stretch from 2005 to 2017 without really having major hurricanes to test it. And in Irma, which was 2017, you saw that many of the homes that had the new roofs did really well from a performance standpoint. It was a lot of like the older tile roofs that really underperformed.
Yeah.
And then you go really fast forward to this hurricane season, and we have seen a significant improvement in terms of how homes are performing. So the newer construction or the newer roof doesn't really take on any, I mean, they'll take some damage, but relatively speaking, you could still move back into the house, maybe a couple hours after the storm, not a couple months. And, one of the things that we have to think about is, as crazy as it sounds, 2002 was 22 years ago, right?
Yeah.
So that means pretty much every shingle roof now meets the Florida Building Code. Probably the majority of tile roofs now meet the Florida Building Code, and a lot of metal roofs do. And so as Florida continues to enforce that building code, we continue to see that the building code works and that there's significantly less claims of those newer construction type homes.
Wow. And would you think that the 2004, 2005 season, you couldn't have possibly been in the insurance business in that time frame?
Yes. So I was not, but my dad was. And
right.
So my dad had an agency at that point that he ran, and it was a very trying time. So I remember, watching him as a kid, see the stress of it. And so it definitely, shaped a lot of, where we are today within Florida insurance.
Well, we got hit in my own personal house. We got hit really hard in that one, Wilma. So would you think that those 2 years would be worse than this year as far as claims and damage?
Yes. So absolutely. And I think I say that on a basis of, obviously the claims cost is a lot higher today, but a lot of that's driven by inflation. A roof back in, 04 and 05 was significantly, less expensive. You also at that point really didn't have a lot of, what I'll say, different policy provisions that have been put in. So like, now there's higher hurricane deductibles in a policy. And so that, kind of lessens the burden to an insurance carrier. And so I think a lot of insurance carriers are significantly more set up for hurricane seasons like what we had this year compared to 04, 05, where there just wasn't a lot of thought as to, wow, I can't believe we can have this many storms in a back-to-back type basis that now really the industry prepares for annually.
Really? So as bad as it was this year with Helene and then Milton following in the same area almost, it was still worse for the insurance industry, or more damage caused in 2004, 2005.
Yeah, absolutely. And it's kind of crazy. And I'll say that this comment is a little Florida specific, but when we think about, Florida, a lot of consumers that we've been talking to over the past couple of weeks have said, wow, I'm so scared for what my rate's going to be next year.
Right.
And I actually just finished a 2-day meeting with one of our top carriers, and they actually have a rate decrease planned for December. And so the rates in Florida have gotten to that point to where they are so high, and they are modeled in for a hurricane season like this year. And so this is kind of, I think, what I would call a as expected type hurricane season, that the rate is actually already adequate for it. Now, other parts of the country, the Carolinas, Georgia, they still have some inflationary pressures on homeowners and auto insurance rates and things along those lines. But within Florida, the state legislature did really what many call the most comprehensive insurance reform in 2022. So right after Hurricane Ian. And as a result of that reform, if we didn't have storms this year, we would be probably talking about a 15 to 20% rate decrease on homeowners insurance.
Really?
As a result of the storms, we're still going to see a moderate rate decrease, like 2 to 5% for a lot of carriers. But really, I would say that resilience is a word that we're hearing a lot from Floridians, from homes, but also, from the insurance carriers from a pricing standpoint after this year.
So that's interesting that there would be a decrease even after the storms, because I was just at dinner the other night with a bunch of guys. We all own houses in Florida, and that the common thing that everybody was saying was, wow, I don't even know if you're going to be able to get insurance in Florida. What do you think about that? I mean, some of them were saying, like, if you can't pay cash for your house, I don't know if you're going to be able to get it. And that's why I wanted to have this conversation with you, because like, you hear all this, like just regular people that don't know much about the insurance business or the insurance world. That's the way it seems, is like, but I don't know if that's reality. Like what is reality right now?
Yeah, I think that's a great question, and that's a conversation that we're having with a lot of our insureds right now. And I think I would say it in a couple avenues, right? If you have a 20-year-old or older shingle roof, it's hard to get insurance. Or if you have a tile roof that's 40 and 50 years old or something along those lines, that there is a lot of rate pressure there, because in general, we as an industry know, and the insurance carriers know, that there will be claims, right? Like we are in Florida, and so we expect for there to be claims. But the number one determining factor of that is age of roof. And so if we have newer roofs, if we have some fortification done to the house, even things like, hurricane shutters or impact glass or anything along those lines, you can really fortify a house to be very survivable from a storm, to where, yeah, you might lose your landscaping, but you're not losing your house anymore. And I think that's a lot of what we're seeing, post Helene and post Milton. I mean, there are definitely, devastating areas to it, but it's the resiliency of that newer construction, or that fortified type construction. And so at this point, that there are really no market indications as to not being able to get insurance. And there's actually still new capital coming into the Florida marketplace of new carriers wanting to come. Now, I will say the Florida legislature does not get enough credit for their work to make that happen. If the legislature did not do the reforms that they did in 2022, we would be talking about, can you get insurance? And it would be 3 to 4 times more expensive than what it is today. But with those reforms, we're in a very, very healthy market cycle. Carriers, even with storms, the carriers are still hitting their profit expectations. And so they really bake those type of storms in their model. And so again, we're performing as expected right now. And I think that's a message that probably isn't getting out to enough people right now, right? A lot of people are living in that expected reality of, can I even afford, Florida insurance anymore? And we're really seeing the opposite.
That's interesting. So mostly what we've been talking about is wind and roofs, but so much of the damage that I've seen on social media and everywhere else, pictures from my friends and other things, are tremendous amount of flooding, sand, mud, that kind of stuff that went into people's houses. And there's a lot of different kinds of flooding that you have to be insured for. Like there's freshwater flooding, and then there's saltwater flooding, then there's wind-driven rain. I mean, I don't know what all there is, but like, how does somebody know what they should have?
Yeah. So, a couple things. So one, when we talk flooding, that is about 90 to 95% the federal government. And so if you have a policy and it says, right flood insurance, or it says all state or something along those lines, even though it says that, it's in what's called the National Flood Insurance Program, or the NFIP. And that's really who underwrites most of the flood program. Now there's a couple challenges within that. And probably the first is, the maximum limit that you can get in that National Flood Insurance Program is $250,000 of coverage. So you have $1 million house, you can only get $250,000. And that is a challenge that a lot of people have, especially for the what I'll call like the slab on grade type homes that have been damaged. It is having enough coverage there. The second, and this is a really big one, is that flood policies written by the National Flood Insurance Program, they don't pay loss of use coverage. And this is probably the one that does have me the most worried from a kind of state of resiliency standpoint, is that somebody still has their continuing home expenses. Hopefully they can get relief on their mortgage payments, but they may not be able to. And their house is damaged and they still have to they don't have coverage for a hotel or something like that if the damage is from flooding. Second side of that is, so how much coverage should I have? Really, what we say is, every house is really in a flood zone. It's just a matter of what risk of flood zone. But, 25% of flood claims happen in non-mandatory purchase flood zones. And so if you have an A or a V zone and you have a mortgage, your lender requires you to carry flood coverage. But if you're in a BC or X, you don't have to carry flood coverage from a mortgage requirement standpoint. Now, one of the big things that people have kind of pushed back on within flood insurance is the cost of it. And from 1975 and through today, the National Flood Insurance Program has required that you pay that premium in full. So you can't do like monthly payments on there. But starting in January, the NFIP is actually opening up to where somebody can do monthly payments on a flood insurance policy.
Really?
And so I think that now when you start thinking about it, it's not, $600 a year, it's $50 a month. That does add an affordability element in for a lot of consumers, optimistically hoping that more and more people see what has happened in, non-flood zone type areas. And I say non-flood zone, meaning non-required purchase flood zones, whether that's Florida, Georgia, or the Carolinas that all got hit on that, and can think about carrying that flood coverage at such a low cost.
What kind of boat claims are you seeing after these storms?
Yeah, it's really interesting. Hurricane Ian had a ton of boat claims. A lot of people didn't do haul outs on their boats. They left them on the lifts, and the way that storm hit and where it hit did a ton of boat damage. Thankfully, in these two storms, we've seen some claims, but I think the good news of Ian is I think it woke a lot of people up as to what can happen to my boat if a hurricane does hit. And so we saw many insureds do haul outs, and a lot of policy language now require the haul out, off of the lift and at least on a trailer and stored somewhere. And so we've seen some claims, but I would say the boat claims have actually come in way under my expectation of where I thought they would be based on the size and the amount of damage that the storms have done in areas.
Wow. I mean, when we first got hooked up with you guys, the way that it happened was that we had some insurance that seemed very expensive, and we just did kind of an audit. You guys looked at our insurance, and you found all kinds of things that were really wrong, and we were paying for what we thought would cover us everywhere. Do you see that regularly, that people? Like, for example, we thought we had coverage in the Bahamas if we took a boat to the Bahamas. We thought we had coverage if we went so far offshore, but we didn't even realize that there was a limit to how far offshore we could go. We didn't realize that if we just pulled our boat out and just put it somewhere, that wasn't necessarily covered as we thought it was, because we didn't have this plan. And you guys really cleaned up our stuff. I mean, I sleep a lot better. Sleep a lot better at night now, but I'm sure that you do that a lot. As it comes to boats, like what are the mistakes that you see people making with their insurance, or that they don't even know that they've made on their insurance until it's too late and they have an incident or something happens and they find out that they're not covered?
Yeah, it's unfortunately something that we run into a lot. And to write an insurance policy in the state of Florida, you can, go get a customer service license and about, a 2-day course, and you can start writing policies. And that's really what we see is that, for myself and a lot of our team here, we set out and wanted a career in insurance. And so we really think about it differently. And so, myself and Landon, we both have what's called the CPCU, which is the highest designation within insurance. And so we really think about insurance about like, how do I really understand this person? And the other side is, we're boaters here, right? Like we're out on the water, we own boats, and we really, understand that if somebody calls in a quote request for a 36-foot boat and they're in Miami, they're probably going to go to the Bahamas. But if you don't ask that question, do I have coverage for the Bahamas? It's not automatically included in the policy. Another big thing that we see within policies is that they have a haul out requirement in the policy language, and an insured didn't know that they have a haul out requirement. And if that happens and a storm hits and you didn't execute your haul out requirement, you have no insurance coverage for that boat.
So what you're saying is like if there's a named storm, any named storm, like it could be a tropical storm, doesn't even have to be a hurricane, or does it have to be a hurricane?
So each policy reads on its own language, but most of them would say that if you're 72 hours out from basically a hurricane watch or warning issued for your area, that you have to execute a haul out on that boat. Or if it does get damaged from wind or floodwaters, there's no coverage.
No coverage.
No coverage.
A sailboat could get blown off its mooring and crash into your boat on the lift. And there would be no coverage for that.
If your policy has a haul out requirement and you don't follow it,
and you didn't follow it,
correct.
And so, man, that's something for a lot of people to think about. But are there other policies that do allow for it to stay on the lift?
Yeah, I think a lot of it depends on the value of the boat and where the boat is. And so the higher the value, the more stringent that requirement becomes. If the boat's under $350,000 in value, it's pretty easy to do to not have to move it. But I would say really once you start crossing that 350, threshold, it depends on the carrier and it depends on the underwriting requirements. And part of it depends on what somebody wants to pay. And so, we just did a boat in Key West that was a 43-foot Freeman. And on that one, the guy said, I do not want to haul it out. And there's a carrier that will do it at that price, right? And so if he, it really depends on where somebody wants their premium to be. And typically there is an option for it.
Well, that's what I was going to say. Like in Key West, there's not really a lot of places that you could put a 43-foot boat.
Yeah.
And certainly not while everyone else is scrambling. I would imagine that you would have to already have that set up. And there are these, I have seen those like on Instagram. I saw this one thing and it was talking about, I guess you get a membership to this place or whatever. And they take your boat, they come pick it up and they take it to like an airplane hangar and it's in there for hurricane, but you would know that you have that place reserved, right? Like in Key West, everybody's scrambling to get their boat out of the water. There's not room for, a 43-foot boat on a trailer is a massive thing. It is a massive thing. It's like bigger than a tractor trailer. I mean, it's a massive thing. What are you going to just park that on the side of the road? Like you got to have a place to park it. And I don't even know that there's a lot of marinas that are capable of finding something inside where you could put that boat if all the racks are taken, right? You would need to have a rack or something. But
yeah, it definitely adds a layer of complication on there. Now, one thing that's really good news is in most policies, if you pay somebody to haul it out up to a certain limit, the policy will actually pay 50% of the cost to do that. And so that's something that a lot of insureds, take advantage of. And so those have been many of the, Milton and Helene claims has been not necessarily damage to my boat, but reimbursement for my haul out. So that the carrier actually encourages people to do that, for them.
Now, when it has a haul out policy, does it require that you take it like so far inland or like, especially like in the Keys? Like if you're in Key West, does your haul out policy require that you take it inland? Because inland in Key West, it's 4 miles wide and 1 mile long, right? Or vice versa. So where do you take it?
So, and that's where I think it gets back to really understanding the policy language and seeing how it's written. And so just as an example, there's a group and we do a ton of business with them as well. And it's called, Charter Lakes and they write policies, and in their policy language, it says, either an approved plan or 25 miles inland. Well, if you don't have your approved plan, that means 25 miles inland. So if you're in Key West, that means you got to find a way to get it into Homestead.
Wow.
And so that's in their policies. Other policies just say, on the heart. And so you can leave it, at a marina and, put it on jacks or put it on a trailer or anything along those lines. And that's where that intricacy of understanding the policy language really comes in, and then being able to help an insured find the right hurricane plan that realistically fits them.
Wow. How'd you learn so much about insurance?
So they say insurance is like the mafia, right? So once the family is in, you can't get out. So grew up in the business.
I don't know. My dad was in the insurance business and I got out.
Hey,
I got out. I never got in. I never got in. That was the thing. Well, he sold his business, so I think I'm out. But I do know what it's like to grow up in around the insurance business. Like you were talking about your dad, you could see the stress and stuff like that, man. I remember those times when there would be a lot of claims or something. And he's like, boy, this is tough. I mean, you got to deal with a lot of loss. But on the other hand, it was very rewarding when he could go out there and hand somebody a check right away. Like, no, like, here it is. There's your money. So anyway, I'm sorry, I didn't mean to interrupt you. How did you learn so much about insurance?
Yeah. So I grew up in the business, with my dad. And so in high school, one of my jobs was to go take pictures of every house that we insured and had to, go submit it to underwriting. And then after that, it was scanning every file into the computer so we could go paperless.
Yes.
And then went to Florida State and did a bachelor's and master's degree in insurance. Came back, worked for my dad, and he sold the agency in 2015 to a bank. And, going from that entrepreneurial culture of 20 people to 20,000 people, I learned I'm an entrepreneur. And so I actually went to the carrier side for 2 years and really, understood it at a different level of working on that risk-bearing side of it. And then in 2018, I came and started this insurance agency and we started with 3 of us. And we've grown to over 40 today.
Wow.
And, probably one of the coolest parts of doing that is actually employee number 1 started as, the front desk girl answering the phone. And she actually, now is our operations manager and runs the ship. And so it's really just been an awesome, time and really, helping an insured, policy by policy with just, finding the right coverage for them.
So with all of that, like you in your dad's business even as an intern kind of level, studying insurance in college, getting your master's degree, then going to a giant corporation, insurance corporation, then on the carrier side, where did you learn the most that you apply today?
Yeah, I think it's probably an accumulation of all of it, right? I went to Florida State, actually wanting to major in entrepreneurship, not insurance. And I went in and had a lot of, college credits already from high school. And I took an insurance class and I was like, wow, I know like 80% of this. This is definitely going to be the easiest major and I could become an entrepreneur and do it. And so I really, kind of went down the path at that point. But I think, really probably those couple of years, after college, there was this crazy thing in 2013. It was called the Bigger Waters Act, and it made everybody's flood insurance go from $2,000 to $20,000 a year. And really dug in. And at the time I was like 21 or 22 and I was on the news almost every night talking about flood insurance. And I really just learned that, hey, just become an expert and you can do really well. And from then on, it's really just been a passion of, helping people and working really within, segments that we also love. And that's really, how we got into the marine insurance expertise and side of it is that we boat and we fish and we love being out on the water. And so it really got to combine, the insurance side with that, of being able to do something different.
That's really cool. And especially the entrepreneurship. A lot of schools have that entrepreneurship. I know that they had that at Montana State where my boys went and they were interested in that. It's kind of funny that a school would have a degree in entrepreneurship, because it just seems like entrepreneurship is like gritty and nobody knows anything and you just try a lot of things. And I mean, that's what I've done.
Yeah.
Is like, but I'm sure that like if I had somebody that could have told me like, well, this is what you do, like these things to get a business started, that would have been a lot easier.
Yeah.
I mean, a lot easier than just making, it's all trial by fire. and and it's mostly fire.
Yeah. It's I think it's I was at a Tony Robbins seminar, and as he said, right, the key to an entrepreneur is being the most certain person in the most uncertain times. Right. That's that trial by fire of just having the belief and the confidence that you can get through it and be able to find a way to create a business and just serve people's needs and that they'll keep coming back.
What Tony Robbins seminar did you go to?
So I am I think my wife calls Tony Robbins my man crush. So I've pretty much done most of his programs.
Really?
Yeah, it's it's been an amazing experience of just kind of, I didn't start the business, doing it, but then you kind of, I'd say you hit those plateaus where you just kind of start getting comfortable and you say like,
Yes.
all right, like, how do I push myself to the next level? And I think that those are the seminars that have really, helped shape me to, continue to elevate our standards and continue to push harder as to where we can take this.
I'll tell you what, man, I've done a lot of those courses too, and it is solid stuff. And if anybody's listening to this and they don't know about those kind of things, it is like, I don't even know how to, it's a combination of motivating you and inspiring you and helping you understand that you can do certain things, but then also real techniques of how to get them done.
Absolutely.
And I mean, if you get one of those things in a period of your life where you really need to do something, like make a change. For me, it was like when I realized that I was going to be a dad, I did that personal power too.
Okay.
And that one was on TV. It was on TV all the time. And I was like, I don't know if this is hokey or not, but everything that they're saying on that commercial, I need that in my life right now. And I just went ahead and I just bought it. And I listened to that. I used to run and listen to that. And man, I swear it changed everything.
Yeah.
Everything. But
it's funny you say that. I'm actually I have the app and I'm trying to do a program. And I'm actually doing personal power right now. And it's it's really just, so much of, as I think Tony says, right? It's, the success is 80% psychology, 20% skill.
yeah.
And you can be the most skilled person, but if you can't take action, nothing happens. And so it's being able to take action when it's not easy and getting outside of that comfort zone. And I think one of the quotes that I remember from, I forgot which seminar it was, but it's, tell me 5 things you're proud of that came easy the first time you did it, right? Everything we do, takes getting out of our comfort zone and it's not easy, but those are the most rewarding. And so it's about, continuously pushing yourself to where you really want to be.
And I've learned so much from him, and even other resources in his company, coaching resources and other things like that. But what an incredible resource for anybody that's looking to elevate their life. I mean, a lot of people will be like Tony Robbins, like some kind of guru kind of.
Yeah.
They don't know. They haven't dug into his stuff, and it's super solid. Don't, it's out there, and you can have it, and it can elevate your life too.
Absolutely.
So when you is it hard to get an insurance company started?
Yeah, it's definitely not easy, right? And so I think,
well, I mean, there's that, like, for me to start a fishing company, right? Like, I got to get my captain's license. I got to get a business license. Other than that, you're pretty much on your, I mean, whatever, like, but I would imagine that in the insurance business, there's a lot more licensing and there's a lot more legal kind of things that you would need to start. And I'm sure that in college, you already learned that as you have a master's degree in insurance and entrepreneurship, you would already know what hoops you need to jump through. But
yeah, it's interesting, right? It's actually it's not that much different than starting a fishing business in terms of, you have to get your, within the state of Florida and within most states, Florida calls it a 220 license. And that's kind of like a general property and casualty license. And the nice thing is it's actually reciprocal to most states. And so one thing is with insurance, it's all regulated at the state level, not at the federal level when we talk property and casualty insurance. And then as a 220, you can apply and get your agent's license, which really just requires a location. And once you have that, you can do that. And that's really where the hard part comes in. And that is now you have to find carrier partners that trust you, that you know what you're doing, to be able to go write business on their behalf. And so, us as an insurance agency, we're really the sales arm of the carrier, but then at the same time, we're the field underwriter to find the right customers for them. And then we're also the customer's advocate on the front and back end of the policy. As to the front end is, being able to talk to the customer and hear what their need is. And so, somebody that calls in for a quote on a Viking is very different than somebody that calls in for a quote on a yellowfin. And so being able to hear that, and then also on the back end of, if they have a claim and they need help with that claim, being able to jump in and talk to that claims adjuster, and kind of be able to get it going on that end. And so, for starting the agency, honestly, what was very lucky that the relationships that my dad had at his agency, all wanted to, jump back on and be able to, restart the agency again. And so that's really, where we were able to get a lot of the successes. It's as much success in your marketplace as anything.
That's cool. So walk me through, you guys write a ton of boat stuff, and that's how we got with you is just reviewing our policy. Walk me through somebody that calls you up for, how do you ensure that you're getting how do you make sure that you're giving them the right coverage, selling them the right coverage so that they are covered for whatever? What's your process? Because obviously it wasn't done when we got our first policy. We did not go through enough questions or whatever to know that if we take it to the Bahamas, we're not covered. If we just store it in the lot in the back of our office, that it might not be covered. I don't know. So walk me through, like you said, a Viking is different than a yellowfin. How do you know that? How do you know that you're giving the right coverage?
Yeah, I think a lot of it is every insured is different. And so I really view our role as to giving them options and allowing them to make their own choices on it, right? And so for some insureds, they want lowest deductible, highest coverage. And for others, they want highest deductible, lowest coverage. And then you have the 80% in the middle. And that is, I kind of want to be, down the middle as to, what I'm looking for. So we really start with, talking to an insured and understanding, the boat. A big driver of it is, the purchase price, and then the prior experience and how do you want to use it. And so, just as an example, there's a charter exclusion in all personal marine policies. And so if somebody just buys a boat and then they decide to start chartering it 6 months later, there's not coverage there. And so I think it's just really asking, questions to them and hearing from them, what they want to use the boat for. And then being able to give them options as to, hey, here's what it costs to insure it, to do this, this, and this, and then allow them to decide, hey, it's actually too expensive to do this, or it's, or I want to, do this instead. And so then it really kind of goes back and forth of crafting. And then once we finish that, then we, deliver the policy to them as to, what they requested. And so I think it's just, I would say the number one, variable is, or really top three variables would be operator experience, would be, purchase price and length of the boat. And if we throw a fourth in there, it would be speed of the boat. And once you understand those four things, that really, helps you start driving that conversation as to how to serve that insured.
What about if somebody calls you up, this is probably we got fishing guides of all shapes and sizes that are listening to this right now. Certainly plenty of offshore guys, but I would think that the vast majority would be something in either between a skiff and a 36. And a lot of those people are going to land in a bay boat. So you got somebody that calls you up and they have a $150,000 bay boat, like a yellowfin with a 400 Mercury on it or something like that. And it could be 200, I mean, depending on how it's set up, it's going to be between 100 and 200, and they're planning on chartering it. What are the important things to think about when you have that and they're living in a hurricane zone?
Yeah. That's really our typical charter captain insured, right? And so I think for a lot of it, it's understanding, are you going to do anything beyond chartering? And so what most don't realize is that I would say 99% of charter policies exclude in-water activity. So are we also doing sandbar trips and we bring a snorkel set? And do we want to carry insurance on that, or do we want to self-insure for that? Unfortunately, I would say a lot of people make the election of self-insurance on there. Another one would be, mini season charters or something along those lines, and understanding the risks that can go into that. And then it's, hey, are you running the boat yourself, or do you have other captains that are going to operate it as well? And so what most don't know is that, in pretty much any boat over 350,000 in value on the personal side, or any commercial charter policy, there's a named operator provision. And so if you don't add your captains specifically on that policy, there's no coverage while they're operating that boat. And so we really try to take somebody through that analysis and find the right policy, format for them, and really be able to give them the choice as to, how to properly insure that boat.
I have heard about a media exclusion. Like if you have cameras on the boat for whatever reason, and in our case, that's very, very important. But just say, a typical charter captain needs to, and I don't even know what that camera provision would be. Is that an iPhone? What is that? Because every charter captain now needs to be taking pictures, needs to be having video for Instagram, for YouTube, for whatever. And if it's popular, they're going to continue to do it more. They're probably going to upgrade their camera, but it's probably going to start with an iPhone. Like, where does that land on the media exclusion?
Yeah. So there's really couple sides to that one, right? So the first, and this is, we had another person with a TV show that doesn't charter, but they have a show. And in the policy that they had previously before they came to us, it had a total business use exclusion, and they considered filming for profit of your TV show business use. And so anytime they were out filming, there was no coverage. And 80% of the time they were using their boat, they were filming, right?
Yeah.
On the commercial side, you run into two issues. So one is there can be the media exclusion on there, which is really, I would say, the way to think about that is, if a film crew comes out with you, or you have somebody like dedicated to the camera, that's really when you're starting to kick into that media exclusion.
But how do you know that though? Because that is like a real gray area, and that seems like a place where you could get denied coverage, because if they look at, they're like, hey, you got a YouTube channel, you're getting hundreds of thousands of views on this YouTube channel. You're telling me you don't have a cameraman? Like, who did this? You're catching the fish and somebody's filming you with an iPhone or with something else. Like, couldn't that be considered a media crew?
It absolutely could be. And the second, and the word you just used there, crew, right? And so that's the other thing we have to think about. And this goes for both media as well as, other captains or mates working on a boat, is there's a crew exclusion. And so we have to actually specifically add crew coverage anytime a captain uses a mate or uses, somebody that's going to be filming or anything along those lines. And so, that's where that intricate policy discussion comes from, as to, really working with somebody to understand what they're doing on it, and then being able to, price that risk accordingly.
So that's what you guys do.
Absolutely.
Like, that you're going to, if somebody comes to you, you're going to ask them all these questions. You're going to make sure that there's media or no media. You're going to make sure that, like, what are you going to do in a hurricane? And like, what kind of questions would you ask about a hurricane?
Yeah. I think, from a hurricane standpoint, it's really, hey, what's your plan if a hurricane comes? And, and if we have a plan to trailer it, where do we want to trailer the boat to? Or, we have an agreement with a marina. And, I think for a lot of insureds, they don't know what their plan is yet. And that's something that we also do is we'll talk them through, hey, if this is your plan, this is what your rate is. And if this is your plan, this is what your rate is.
So give me two examples of like, if this is your plan, like what would the first one be?
So if your plan is to leave the boat in the water, this is where your rate would come in compared to if your plan is to, put the boat on a trailer. Are you going to haul it to your house? So to use an example in the Keys, are we going to haul it to a house in Isla Mirada? Or do we have a place in Homestead that we're going to try to haul it to? Two different risks and two different rates that would go on there. Another one could be, I plan to leave it on my lift. And let's just say this is a, Naples type example. So I plan to leave a boat on my lift in Naples. Okay, do you plan to put it on a trailer if a hurricane comes? Do you want to hire a service to put it on a trailer for you and get the 50%, reimbursement? Or do you want to, just leave it there and either face a higher deductible or a higher rate on the policy? And that's where really we try to walk an insured through, various options as to how to come up with, what fits you, because everybody has a different level of risk tolerance. And everybody also has a different level of time tolerance. For some, it's, no matter what, I don't want to, haul it. And for others, it's, we see in a lot of cases, right? People care more about their boat than their house. And so they'll do whatever it takes to protect the boat.
Tell me this. I bet you we were not covered for this. Charter captains chartering the boat all the time, but then we're also fishing in professional redfish tournaments, and we're trailering the boat all the way to Texas and fishing over there. And then I bet you on the road we weren't covered, and I'll bet we were outside of our coverage zone somehow. I don't know.
Yeah, absolutely.
Question. So there are plenty of people that do that. Either recreational anglers that take their boat to all these different places and fish, or charter guides that take their boat somewhere and either on vacation or for a tournament or something like that, and they're trailering the boat. What do we need to be worried about there?
Yeah, so that's really looking at your coverage territory. And there's a couple things to think about on a coverage territory. So one is, states covered and you're absolutely correct that, many Florida-based policies aren't going to cover all the way to Texas unless specifically added and advised to go all the way to Texas. The second, again, that's kind of similar to that, is how far offshore do you plan to bring that boat? So whether it's, the wreck angler or the charter captain, there's a basically offshore guideline that gets added in there. And so if somebody plans to bring it, 100 miles offshore, if they have a standard Progressive policy, Progressive only covers to 100 miles, to 75 miles. And so that guy then gets excluded for coverage. So there's the coverage territory of like where you are state-wise, but then there's also the how far offshore do you want to go coverage territory. And that's really all that we have to think about when we look at that policy.
What about lightning?
Yeah, lightning's a big one. So most policies do cover lightning strikes, but most policies have gone to increased deductibles for lightning. And so it used to be, like a standard flat deductible in a policy. And for the most case, and each policy is different, but for the most case, it's a 10% deductible. And it's not 10% of claim, it's 10% of boat value. So on a $400,000 boat, that's a $40,000 deductible on there.
That's the most you can get?
So from a deductible standpoint,
from a deductible standpoint, that's the deductible. Okay.
Correct. And so, but the boat would then be covered after the deductible. Another one that we're seeing that same thing apply to is theft. So especially in Southeast Florida, we have a lot of theft of electronics and lower units.
Right.
And so a lot of policies have gone to a 10% theft deductible as well. And when you think about the inverse effect of that as to the price of boats has also gone way up. So those deductibles have gotten pretty large because what used to be a $300,000 boat is now a $600,000. And so now you're talking a $60,000 deductible for lightning or theft in the typical policy.
So if you get your lower unit stolen, it's obviously not going to be 60,000. You're just on the hook for that.
In most policies right now, that's the case.
And what could you do to prevent that or to insure yourself for that?
So part of that is looking at your policy and seeing what the deductible is. And then the second that an underwriter is going to want to say is, what have you done to start preventing theft? So a lot of, people have put cameras on their boats.
Yes.
Others have put, the different theft deterrent systems that, sends a notification to your phone. And so if you have a really good theft plan, a lot of underwriters want to look at it. But the challenge has been if there's not a theft plan in place, those are the deductibles that are starting to come back from the market.
What about when you're trailering your boat? And like one of the things that we talked about before was if you're trailering your boat, you stop at a hotel and you spend the night. Or you're in a fishing tournament and you're in a different place and you're stopped for the night. There was something about unhooking your boat versus keeping it hooked to the trailer, to the truck. What do you need? What do we need to have for that to be covered for theft, for damage? I mean, another truck could come through there and smash your boat while you're out at dinner. I don't know. Anything could happen.
Yeah. So, that's where, each policy is going to be a little different depending on the language that the underwriter comes back with. In most cases that there is coverage that applies there. But it might be that they get hit on that higher theft deductible if items get stolen off of the boat. And another one is, if let's just say you're storing your rods and reels on there while you're in that transit. If you don't have what's called personal effects coverage, which is basically think of that as items that move on and off the boat. So you think about the price of some of these electric reels, that gets expensive really fast. And unless you have enough personal effects coverage compared to the price of fishing equipment today, there can definitely be some coverage gaps that get formed into policies.
So, but you can unhook your boat at a hotel for most policies?
So I would say check your policy and review that with your agent because each policy would be different. So I would say tough to give advice within that one just because the policy can be different on there.
Well, I mean, there's certain hotels that you go to and there's no room to park while you're hooked up. So
yeah.
You have to unhook. And your boat's just sitting there. Somebody could just hook up to it and take off with it. I've always thought that's even if you have like a couple lock thing, you could easily get it stolen right there.
Yeah.
Probably even has the keys in it.
Yeah, exactly. And that's where I would say just checking with your agent that writes your policy and telling them what your plan of transit is so that they can confirm, whether or not you have something to be concerned about.
So that's where somebody, if they're considering changing their insurance or considering like they hear all this whole conversation that we're talking about, it's like, man, I don't know what I have. And then you start reading through it and it's all insurance language. You're like, I don't know. I mean, that's what we did with you guys is just say, we don't know. We feel like because of some things that we've learned lately that we may not be covered for the things that we think we're covered for. Can you look at this? I mean, do you do that a lot?
Absolutely. That's really where 99% of our customers start. And so, what we're going to ask for is a copy of the current declaration pages. We don't really care what somebody's paying, and so if somebody blacks it out, it doesn't matter to us. What we want to understand are what coverage do you have? What are your deductibles? And what are your endorsements? Because even if a policy says it's covered in one place, it can endorse that coverage off later in the policy.
So when you say endorsement for somebody that doesn't know a lot about insurance, like that goes right over, like that seems like something that goes right over somebody's head because they don't understand what that term is in an insurance term. Yeah. So explain endorsement.
Yeah. So think of an endorsement as like a modification to the base, right? And so most policies start as, let's call it this 20-page document and they end up at 45. And so the endorsements change those initial 20 pages. So as an example, we had an insured and they had a theft in Jacksonville. And so boat's in a marina gets hit, all of the garments stolen off of the boat. And so they call the claim in and they started by looking at their policy. And in the base policy language, it said you have a $250 electronics deductible. So they call the claim in and they think they've got coverage, about a $600,000 boat. about page 30, it has a theft endorsement. And that endorsement is really, really important because it modifies that $250 deductible to a 10% deductible, which now equals $60,000. So that insured went from, I think I have coverage on these 2 Garmin screens, to I really don't have any coverage on these Garmins because at the price of the Garmins compared to my deductible, there's no coverage.
Right. And the word endorsement is strange because that sounds like it would allow for something else. Like I'm endorsing this, but it's almost exactly the opposite. It's saying that this is an exception almost.
Yeah.
Like,
So, it can do either, right? And so in one sense, in that theft example, it takes it away. But in another sense, Bahamas is not covered in a base policy. And so that endorsement can then add the Bahamas coverage onto the policy. And so it's really the endorsement is a modification of that base. And that's where I would say it's almost more important to understand your endorsements than your base policy because they can do so much to change it.
So one of the things that I've heard from some people is that many of the claims from Milton have been denied. Why is that? Do you know?
Yeah. So, what we're seeing from a lot of our carriers is about 50% of the claims have been closed at this point, and a lot are closed without payment. And that's because you have 2 deductibles on your policy. So you have a non-hurricane deductible and a hurricane deductible. And that hurricane deductible is a percentage of your coverage. And so if you think about a $500,000 house with a 5% deductible, that is a $25,000 deductible, and a couple trees down going to fall below that deductible. So things that maybe used to be covered in a policy are now basically kind of kicked out by the deductible.
Wow. And so how would someone know, ahead of time when they're getting insured that's the case? I mean, most people just don't know that that's a question that they even need to be asking. Other people that have been through a few storms and they've seen how this all works, they've learned the hard way that these are questions that they need to ask. But somebody that's moving down to Florida, first-time homeowner in Florida, first-time homeowner, period, they don't know to ask these questions.
Yeah, I think the challenge on there is that most people see the percentage and they think it's a percentage of their claim, and so they're fine at a 5 or a 10. Fortunately, it's a percentage of your coverage amount, not of your claim. And so, and traditionally in coastal markets, the lowest deductible you can get is 2%. And so on that same $500,000 house, if the wind blows, it's going to be at least a $10,000 deductible. But that's where you really want to take a look at that declaration page, hopefully before the hurricane and before hurricane season, and see if you want to drop those deductibles down lower.
Well, I think that the definite advice I would have is to find an agent that knows a lot about insurance like you do, that also you can trust.
Absolutely.
And that is, I mean, that, and some people, I don't know, they've never had that before.
Yeah.
Like they've never had an insurance agent that is actually asking them the questions that are really, really important. And I would think, like, just watching my dad go through the insurance business like you did with your dad, what's your worst nightmare as an insurance agent? That you sell somebody a policy and it doesn't cover what they thought they would cover, and it was your mistake somehow?
I would agree with that. And I think that it's really, I think the challenge that comes out is that, you've got to do your best job to educate the customer. And unfortunately what can happen, and I would say this happens more on the homeowner side than the boat insurance side, is that they get pushed for like their loan ratios to get the cheapest policy because they have to qualify for that loan. And then that's the customer that has the claim. And a lot of times it's the person that can least afford to have the claim that has the big claims. And those are the tough ones.
Mm-hmm. Yeah. So if you find that person, like you guys, like you could what would somebody do if they wanted to check out, have you check out their policy? Like what's the protocol of?
Yeah. So typically, they'll, call or email us or fill out like our website form, for us to get a hold of them. And then, where we're going to start is, hey, do you have a copy of your current declaration page? And that's the page that kind of summarizes the coverage and the endorsements on it. And then from there, we're not going to look at the pricing on it. What we're going to look at is what's covered, what's not covered, and what maybe should be covered. And then we'll go out to market. And so, we work with, over 50 different carriers, and we'll get a quote from all 50 and see, what fits for that insured. And then we deliver back, a set of options, typically 3 to 5 options on there, and say, hey, these are basically your variables. And, our job is to present the options and then be able to take the answer from the insured as to, hey, this is what fits my level of risk tolerance and my pricing tolerance. And then we go ahead and work on getting coverage in place from there for them. But it's a pretty easy process. If it takes more than 10 minutes of their time, it's kind of a problem. But we see, savings in the thousands and thousands of dollars by just kind of taking 10 minutes to look and understand. And, we really see a lot on the auto insurance side. We've seen so many insureds that bought it online. They have no idea what they bought online. And then they have the claim. And they're like, what do you mean it's not covered? And
Right.
Again, our job is to show them the options and then craft it based on what they selected.
So on some of these things that we've talked about, like, what do you think, like, as far as boating insurance goes, what do you think that the most common thing that people think that they're insured for and they're actually not? What do you think that is?
Yeah, I'll kind of hit 3 on there. So one is the Bahamas. If it's not specifically added, it's not covered. Another one is offshore limitations of being able to stretch beyond the 75 miles, depending on the carrier. And some carriers are down to 20 and 25 miles. And the third one is, on a loss, do I have total boat replacement? Do I have agreed value, or do I have actual cash value? And that's a really big definition difference, right? And so on actual cash value, which is the standard unless you endorse it up, that pays the depreciated valuation of a boat, right? And so they're going to basically charge off the useful life that's been used on there. On agreed value, it gives you a set amount basically without depreciation on there. And then if it's a new boat purchase, some carriers offer that, especially what we saw in like 2021, right, where the price of boats just escalated really fast. They offer like a 20% rider over the purchase price to get a new boat if it's damaged within the first 2 years of life of that boat. And so that's something that we've seen a lot of. And, just as an example with jet skis, if it's over a year old, you can only get actual cash value coverage. And then with the various boats, it depends on the age of the boat and the value that you're insuring it for. But that can be a stinger for some insureds as to what that word actual cash value means.
Wow. And then what about, how do you know about haul outs?
Yeah. So that's where you want to read your policy and see if you have that haul out. And that's something where if you have a question and you don't see the answer immediately, definitely that's something that our office can help you with and be able to advise on there. Because it kind of gets put in page 30 of that policy as to what your haul out requirement is. And so unless you know what your haul out requirement is, that's one that can definitely hurt upon a claim.
Wow. Man, I'll tell you what, I learned a bunch about insurance. Mostly, like, it's not always about, getting the cheapest insurance. I mean, there is a time, when you basically can't afford a boat. Like when you're getting into being a fishing guide, you can't afford a boat basically. So you maybe spend a lot of money on a boat, and then you have to have a certain amount of insurance to be able to operate, to be able to go pick up customers at the marina or whatever. And they have to be named an additional insured and all these things. And basically it's already tough. You're young, you're trying to get the cheapest insurance that you can possibly do to allow you to work at this place. You're not really thinking about, well, what happens if something goes wrong, because you're too young and you don't have enough experience yet to understand what the importance is. And then there's another part of your life where you're like, I feel like we're not insured for a lot of things that could happen. Storms, someone falling off the boat, like all of these different things that could go very bad. So now it's like, I'm not looking for the cheapest insurance anymore. I'm looking for the proper insurance, the coverage that if something goes wrong, I'm covered, right? Like that's a whole different, those are two totally different places in your life. And I'm sure that you see both of those.
Yeah, I think for us, it's finding the balance of value, right? And what's value in an insurance policy? It's the combination of coverage and rate. And so fitting the coverage and finding the best rate for that coverage. And, I think one of the scary things is, in Florida, you have to have auto insurance to drive a car. Now, you don't have to have much, right? It's state minimum standards, but you are not required legally to have boat insurance to register a boat. And so one of the claims that we can see is somebody gets hit by an uninsured boater. And unless you have uninsured boaters coverage, the damage, the injury that boater causes to you may not be covered. And so, within Florida, boat insurance is very, very needed. And unfortunately, we even run into a lot of charter captains that don't know if they have insurance. Typically, if they don't know, they don't actually have it. And again, you're not required by your license to have insurance, but you are legally liable for any damage that happens. And
Right.
So those can turn into large claims, and no coverage on there potentially.
Sometimes it seems like you're insuring a boat for damage, theft, sinking, things like that, damage. But what about like physical liability coverage? Like if someone were to get hurt, if someone were to fall off the boat and get struck by the propeller, I don't know, whatever could possibly happen. How do you know if you have that coverage?
Yeah, so that one to me is in many ways more important than the physical damage, right? Because you can look at the physical damage and you can say, "Hey, I'm okay taking on X amount of risk, and I know what my deductible is." On a liability claim, you don't know what your you don't know what your maximum potential loss is. That's really up to a judge and a jury. And so that's typically it's what's called Part A of the coverage, and so it'll be within the policy. Typically starts at like $100,000 in coverage and then goes up to $1 million in coverage. And then if somebody wants more coverage than that, there's what's called an umbrella policy that they can purchase, and it gives them, excess limits beyond that. But that's a great question. And it's one that I think, probably doesn't get talked about enough as to, what the downsides are if you don't have, at least a minimum of the right liability coverage.
Yeah. I mean, especially for a charter captain.
Yeah.
Like you got different people on the boat every single day.
Absolutely.
A lot of things could happen. You need to make sure that you're covered for that.
And boats move and they're wet and they're slippery and you have waves and things like that. And so, injury happens, and it's just making sure that you're protected for that injury if it happens to a passenger.
Wow. All right, cool, man. Well, I learned a lot, probably more than I don't know, more than I expected. I really didn't. I had a few questions and you answered way more. I mean, I think you probably know more about insurance than, God, I think you might know more about insurance than my dad. And he was in the business he's still in the business. He's 86 awesome. Years old. He still goes to the office.
That's amazing.
And but insurance is a business like that where, I don't know what he would do if he didn't go to the office, because he's had these customers for so long, and he goes and talks to them, drinks coffee, talks to them, checks out what's going on, and just stays in touch. And it's been really good for him to continue to do that as he's gotten older. Where I've seen other people retire and just go downhill.
Yeah.
But the insurance business has been really good for him.
It's really an amazing business where you just get so passionate for your customer, right? And really, we really do have a passion for the success of our customers. And so we love, hearing stories like that. And it's amazing to see that passion get fueled as to, the care that insurance agents, like your dad, like ourselves, and like so many in our industry really have for making sure the customer is taken care of.
Yeah, but other people, they're just like in fishing guides. There are some real great ones that treat being a fishing guide like a work of art. Like it is pure professionalism. They're trying to get better every single day. They treat their people wonderfully. And then there's other people that aren't doing that.
Yeah.
Not very good. And I think that there's definitely that in the insurance world.
Absolutely.
People that are super passionate about it, like yourself, and trying to get better at it every single day and serve their customer the way that they deserve to be. And then there's other people that are like, nah, I'm selling insurance now. I don't know. Maybe I'll do it again next year. I don't know.
Yeah.
Like, that's not, I don't know. You want to be with you.
Yeah. Well, it's for me, it don't really work, right? I get to do what I'm passionate about every day. And I think that's really, what our team is. And then so, Landon, who runs our marine team, he's got the same drive and passion to him where, he's equally passionate about insurance as he is fishing and boating. And so, that's where we really have fun by merging those passions together.
That's super cool, man. I don't know if there would be a better testimonial than that. Like somebody that's going to spend the time with you to understand what it is that you do and then find the best policy for you to make sure that you're covered, and make sure that before you sign that and pay it, that you actually know what you're covered for and what you're declining. Like, I think that's really important, is like, okay, so this costs this much and you're saying you're not going to go more than 25 miles off. So if you go 26 miles off and something happens, you're not covered. You understand that, right? Like, that's not something that has been really in the process of getting insurance for me in the last 20 years. Because my dad can't write this insurance. So I never could write this. I never could go through my dad to get this insurance. Now I would pass the stuff by him and say, what do you think about this? But he also doesn't know the charter business. So he doesn't understand exactly. I mean, he's a good insurance agent, but for what he does.
Yeah.
And what you guys do is focus on the marine, but you also do the, everything, right?
Yeah. So we're really, full service insurance agency. So we do, personal lines, homeowners, flood, auto, the boat side. And then on the commercial side, we also specialize in, marine artisan contractors. So your fiberglass repair guy, your electronics guy, your boat manufacturer, your marinas, anything along those lines. We have a team that specializes really just in writing marine insurance clients on the commercial side as well.
So manufacturers like boat factories,
absolutely, boat dealerships. We've had quite a few stories of dealers not understanding what was or wasn't covered in their policies, and being able to help them get the right coverage in place.
That seems like that'd be a big insurance policy for a place that has tons of boats sitting.
Yeah,
especially in a hurricane zone.
Correct. That's again, making those hurricane plans. But we had one where we just wrote them and they had an exclusion in their policy where if a tropical storm warning or watch was issued for their county, they didn't move all of their inventory out of that county, they had no coverage. Well, they had an inventory of over 100 boats, and it said 5 days before. Well, how often have you seen a hurricane start at one place and move to another? And so we got them, a new policy that said, hey, you can leave it here, but you just need to do these precautions to leave it on your lot. And so, it's really taking the time. And again, they were with an agency that didn't understand the marine side of it. And so they just sent them a premium and they paid their bill every year, expecting the coverage was there until they realized what wasn't covered.
Wow. Well, I hope they realized that before there was an incident.
Thankfully they did. So so thankfully we've got them, steered in the right direction now.
See, in that situation, then you're like a hero, right? That's gotta be pretty rewarding. But anyway, if somebody wants to check you out, send you the policy like we outlined, what would they do?
Yeah. So, if somebody wants to give us a call, best phone number is 727-498-5551. Or to email us. It's pretty easy. It's just sales, SALES at HHINSgroup.com. Okay.
And that's where they fill out you said there was a form on your website.
And then also our website is HHINSgroup.com. And if you go on there, there's get a quote button and you can fill out a form, and then we'll start working on it and give you a call and just kind of, talk to you and understand what you're looking for and see how we can help.
All right. Well, they can probably help by either saving you a lot of money or making sure that you got the right coverage. That's been my experience. So cool. Jake, thanks, man. I appreciate it. And we'll do it again.
Sounds great. Great to talk to you.
All right. Thanks. See ya.